Welcome to another edition of Texas Capital Live. I'm Lee Bratcher, one of your hosts for today. I'm here joined by my co-host, Steve Kennard. We've got a great lineup today at the epicenter of the digital asset ecosystem, Coinbase, Coinbase Asset Management. Joining us today, President Anthony Bassili of Coinbase Asset Management, and also Doug Wilson, who, Doug, correct me if I'm wrong, but head of credit at Coinbase Asset Management. Welcome to the show.
Great to be here, guys. Thanks for having us. And
Thanks for having us, Lee.
we're calling in from Dallas, Texas as well. So it's good to see you guys in the same city.
Everyone's in Dallas.
Well, you guys announced some pretty exciting stuff today. Let's get to the Bitcoin lending facilities. You guys have had traditional Bitcoin for cash lending facilities that have been around for a long time and over $700 million out the door. What is the latest Bitcoin lending facility that provides Bitcoin yield for folks in your ecosystem? How does that work with Bitcoin and with Coinbase Asset Management in particular?
Sure. Lee, let me start with just backing up for a moment and just to make sure I level set with everyone who's listening. So the Coinbase Asset Management is a wholly owned subsidiary of Coinbase Global. And Coinbase Global, if you think about the different business lines, they have the exchange, which today serves tens of millions of people. You have the institutional prime business, which serves tens of thousands of institutions, everyone from BlackRock to the largest DATs out there who are holding Bitcoin and digital assets with the prime custody business. Many of the largest miners are engaging in financing arrangements with Coinbase Institutional, and we sit outside of those two businesses. So Coinbase Asset Management is a U.S. registered advisor. We build funds, we manage money, we execute and implement discretionary strategies. And our goal is to help our clients, our investors, make money in the digital asset space. So what we've seen as in the evolution of our business as an asset management business is, today we're a little under 900 million in assets under management. We have that across 3 funds. We also have a lot of that in managed accounts. And we have different types of clients who come to us from all shapes and all stripes who are very early Bitcoin investors, and they're looking for yield, right? This is the most common investor who's coming into the space to look for different ways to generate what is income or generate some kind of alternative source of yield in their portfolios, because Bitcoin has become such a large portion of their own value, their own net worth, right? So this is a big trend in the family office and high net worth space. It's increasingly becoming a trend for even corporations who've accumulated a lot of Bitcoin, right? And we're clearly deep in the thick of this massive movement around Bitcoin digital asset treasury companies and other digital asset treasury companies who are taking on the capital markets to raise capital and bring more buying pools into digital assets. So we serve all kinds of institutional investors in the asset management business, and our flagship strategies are focused on yield and credit, right? But what we're trying to do is we're trying to allow the investor community who participates in our funds to get access to Bitcoin, keep their beta intact, right? Because what we see is investors, they really want Bitcoin. They don't want to sell their Bitcoin, but they want Bitcoin to be a productive asset for them. So we want to make sure that Bitcoin stays intact and that they're able to participate in the beta of Bitcoin, which we know that the theme is that it offsets monetary debasement, right? This has played out year after year over multiple cycles, and we think it's going to continue to play out. We think Bitcoin's the best asset you could own today for your portfolio. Now, the big question then becomes these investors who come in and they say, well, we've got very long Bitcoin. We'd like to make it productive and put it to work. Our focus on this is really around the digital asset credit economy. So if Bitcoin is pristine, good digital collateral, much like a house is good real collateral, then you can use it as collateral. And this is exactly what's happening across the digital asset ecosystem. You're seeing the rise of credit instruments grow. They're seeing the rise of people borrowing against their Bitcoin to fund various parts of their nominal life, right? So we buy things in nominal terms, but people put savings in Bitcoin that gives them like a real return to offset the nominal debasement that they experience. So they want to hold their Bitcoin and they want it to be productive and produce some income. The big question is how. So Doug, who's head of credit for Coinbase Asset Management, which is a team of 15 based in Connecticut, we've put together a number of strategies that allow us to participate in the credit creation part of the Bitcoin economy. And we also do this in stablecoins. I'll mention that the stablecoin economy is growing. People taking credit, generating credit, issuing credit in various forms against digital collateral, but paying for the entire thing with stablecoins is another major theme that we have, right? But right now we're here to focus on really with Texas Blockchain Council, Bitcoin miners as the biggest participant in the credit creation of this. So just by way of background, I've been part of Coinbase for 4.5 years. Was previously part of the institutional business. Prior to that, I was head of the pensions business for iShares at BlackRock for over a decade. I've joined an amazing team. We have folks from AQR, from KKR, we have folks from Millennium, we have folks from all the top institutional asset managers in the industry, and TradFi, who've come in to be a part of One River, be a part of Coinbase Asset Management now through the acquisition that happened in 2023. Let me hand it over to Doug to do an intro on himself, and then we can talk a little bit deeper on what we're seeing in the credit creation around Bitcoin.
Great. Thanks, Anthony. I'm Doug Wilson. I'm a portfolio manager at Coinbase Asset Management. I'm also the head of credit. I spent 25 years in traditional finance, started my career trading mortgage-backed securities, transitioned over to energy and spent 15 years working for a large family office based out of Fort Worth, Texas, multiple $billion in their portfolio. And our mantra was to go out and find interesting things to do in the credit space and the equity space, cross capital, and go find ways to hedge it. After my 15-year tenure there, I left and went to a large New York-based hedge fund and sat on that desk for a number of years before finally transitioning over completely to digital in the predecessor to Coinbase Asset Management. So I've been affiliated with this entity since November of 2021, seen some bear markets, built some products that were successful in the last bear market cycle. And so where we're focused on today is generating yield for our clients. As Anthony said, the number one request and interaction that we have with our investors is people coming to us with long-term holders of Bitcoin. They've owned this Bitcoin. It has a very low cost basis. They want to find ways to make that asset productive while still participating in the long-term thesis behind Bitcoin, which is a continuation of up into parity with some of their store of value assets, such as. So our charge is to find ways to generate yield for our investors on their Bitcoin. So as we looked across the landscape and looked at various ways that we can satisfy our investor requirements in a very prudent manner, with principal protection being the foremost consideration as we look at ways of generating yield. One of the most obvious ways is interacting with the Bitcoin mining community. Bitcoin mining is really the only organic way that Bitcoin is created in the ecosystem, and it happens every 10 minutes through bull markets and through bear markets. And so Coinbase Global has been active in lending dollars into the Bitcoin mining ecosystem using Bitcoin as collateral. They've been active in this activity for a number of years. We're separate from Coinbase Global. We're Coinbase Asset Management. Our investors are outside investors that come to us with Bitcoin. So what we've designed is a product to where we lend Bitcoin into the mining community for a term of generally 6 months. We receive daily payments of Bitcoin principal and interest that come into our wallet, and miners can use that Bitcoin for whatever corporate purposes they need. Typically, to expand their operations, they can use it as a form of payment to buy ASICs. They can take the Bitcoin, they can sell it, convert it into fiat if they need to buy electrical equipment or land or buildings or any other corporate purpose, such as expanding into high performance compute and AI. Now, historically, we've we've lent with collateral on the other side of it. This is pretty commonplace in the digital ecosystem, is lending against a collateral package. And historically, Bitcoin has been the only form of collateral that we've considered taking. However, in recent interactions with our investors, we've started exploring having a more flexible collateral package. So, what does flexible collateral package means? In a nutshell, it means a combination of digital assets, Bitcoin, plus some other forms of collateral, which could mean hash rate. So I think that our investors, they tend to have been in and around the Bitcoin ecosystem for a number of years. They understand mining. They understand the importance that it brings to the ecosystem, and they're willing to accept hash rate as a part of the overall collateral package in conjunction with Bitcoin. So this is something that's new for us. We're excited to announce it today. Obviously, the form of the collateral package is on a borrower specific basis, but this is something that we're excited to offer to the market. We've spent any number of years engaging with miners as Coinbase Asset Management and as our predecessors. So we're very excited to make this announcement today, and we're keen to get involved with the community in lending, not only against Bitcoin, but in other flexible forms of collateral.
That's fascinating. Doug, Anthony, tell us a little bit more about the arrangements, if you can. Are we talking about the hash rate, like future hash rate, or kind of realized hash rate in any given day? How does that work? And how do you guys protect and hedge against like potential difficulty increases over time? Is that with duration? Is that like keeping the duration of the loans shorter? How does that work?
Well, so we think about these are loans, and so we think about a loan as you lend principal, and as a lender, our expectation is that we receive a full remuneration of our principal plus interest. So we're not interested in taking difficulty risk. To us, if you're willing to take difficulty risk, that rhymes more with equity. That's more of a speculative endeavor where you're making a bet on what future difficulty is. So what we aim to do is we aim to lend to miners. We aim to receive full repayment of principal plus our interest. And to ensure the full repayment of principal plus interest, we ask that they post collateral. And so that collateral can take the form of Bitcoin, and it can take the form of hash rate. But obviously, a hash rate that would be adequate enough to ensure the full repayment of the loan, plus an additional margin of safety in the hash rate that would ensure that were difficulty to increase dramatically, then there would still be enough hash rate that would be available to ensure the full repayment of principal plus the interest.
Understood. And did you may have answered this already, but did you speak to the duration? What are you guys thinking about duration?
So we're thinking that our benchmark instrument is 6 months, and we talk about. I often talk about a journey. We're going to be going on a journey with the mining community, and like all journeys, you typically start the journey in a very conservative fashion, and then as the journey progresses and as you gain experience with the folks that you're traveling with, then you gain a greater level of comfort. So to start with, our plan is to offer a 6-month benchmark instrument. In time, I would expect that would expand, but for right now, the benchmark instrument is 6 months.
Steve, I'll turn to you. You have any questions for Doug and Anthony?
Yeah, we were talking earlier, guys, about the influx of institutional interest and capital into this space, and particularly we were talking around the shift to lower cost of capital. And Anthony, you mentioned Bitcoin is pristine digital collateral. And it used to be that there were relatively few lenders, more in the DeFi space, right? And then more institutional capitals come in. That cost has come down to lend against that capital. It feels like that really puts a tailwind into this whole move that you're announcing around this increased kind of institutional offering that you're rolling out. Can you talk about that sort of continued kind of reduction in the cost of capital lending against Bitcoin that serves as kind of a foundation for y'all to build on top of?
Sure. So I think if you go from the top down and you look at the entire digital asset ecosystem, it's roughly a $4 trillion asset class, and 65 to 75% of that is in three assets: Bitcoin, Ethereum, and stablecoins. And then the other 25% is extended into a long tail of alternative digital assets that represent a whole host of different applications, blockchains, and technologies built on these rails. And so when we look at this, we say, what's the product that digital assets has brought to market that has product market fit, that has global adoption, that has regulatory clarity, that is very clearly a commodity, and there's virtually no going back from that at this point. And then you say, what's the product that has the most depth, and what's the product that has the most volume, breadth, and velocity, right? And it's Bitcoin and stablecoins. So as we think about this from an asset management perspective, and we go, how do we build products that are going to scale into, if we expect Bitcoin to continue to go from 2.5 trillion, and maybe reach parity with gold at some point over the next 10 years, right? That means that there's a long way to go in terms of not only the extension of Coinbase's, of Bitcoin's price, but also the millions and millions, eventually billions of holders of Bitcoin. And those holders of Bitcoin are going to look for credit. They're going to look for borrow lend. They're going to look for liquidity so that they can live their lives. And that's going to be the case until and if we ever get to a point where Bitcoin itself is the payments instrument, which is certainly happening, and it's happening with the Bitcoin miners already. So that's the long, big macro trend that's happening with Bitcoin. It's being integrated into the institutional financial system. You see firms like JP Morgan coming out looking to lend against Bitcoin. We've been doing it for years, and you're going to see most major banks are going to start activating on the same theme. What does that mean? We expect to see a large influx of capital coming in to lend against Bitcoin. Why? It's 24/7 global, liquid, and it's a pristine digital asset that's collateral, which means if you're going to sit here and go, I'm going to lend you money, and in the traditional sense, I want to have a corporate guarantee, right? Okay, well, I've got bankruptcy risk, I have some cash flows, I've got to go deal with a lot of taxes and other things to get my asset if you don't pay me back. I'm going to lend and I want some kind of rev share, or I'm going to lend and I want access to your underlying land, or I want access to some other assets, or maybe I'm going to lend against your stocks. In the institutional space, folks are lending against private fund shares, private equity fund shares. NAV lending is a very large business in the institutional lending space. So broadly speaking, lending against digital assets is not that crazy. It makes a lot of sense. It's even better than doing a lot of lending against private markets. You have a liquid digital collateral that's transferable across borders very easily, and it's easy to wrap the asset in smart contract logic, which lets you systematically liquidate the asset if you need to, if there's a failure of repayment. But there's a lot of nuance in terms of how you negotiate those structures. And so we think that this is just one of those assets that's probably one of the best things you could lend against, right? Digital assets, Bitcoin being that particular asset. So what does it mean for costs? It means that right now we expect, because there's still a lot of friction and fragmentation in terms of traditional lenders being able to lend against Bitcoin in particular, right? Costs are still relatively high. The Bitcoin mining community and others still don't have access to the full capital markets, debt markets, and equity markets. Many of the middle market players in the Bitcoin mining space, they don't really have access to traditional private credit, which is now a $4 trillion lending industry that serves pretty much every other industry. We think it's going to come in. So our focus today is to lead that charge, right? We want to be able to deliver financial solutions, deliver outcomes for the Bitcoin mining industry, because it is important that they have access to capital through multiple market cycles. We think not only can we do that, but we can also build great products that allow investors to keep their Bitcoin exposure and get yield on top of it.
Yeah, the leadership and innovation from Coinbase in this space is really important. This is an important offering for Bitcoin miners. That means it's important for Texas. So we're all about it. We absolutely support what you're doing. Appreciate you announcing this today. And I also think it's important for the viewers to appreciate that Coinbase Asset Management, as you pointed out, is a separate entity from Coinbase, the exchange, and you're doing a lot of incredible work. So I'll encourage people to go to cbam.coinbase.com, learn more about what y'all are doing. Anthony and Doug, thanks so much for joining us.
It's great to be here. This is a great show, by the way. We're big supporters of